Hello and welcome to Biz Africa, your weekly show which will provide you an insight of the business and finance sector in Africa. In this program, every week, we'll bring you a profile of a successful company as well as global and African market updates. In the first part of our show, Mark O'Sullivan, who is the Chief Executive Officer of Island Premier Foreign Exchange, will bring you his expert analysis about market updates.
As we come to the end of 2012, it's probably quite good to go back and review Africa's growth for this year and how it will potentially grow next year and fit into the ever-changing global economy. Well, there's no doubt that the last 5 years, I would say, Africa has become the key word for investors. It's a huge continent, and you've seen huge upheaval. In the north, you've obviously seen the Arab Spring, with Tunisia and Egypt and even Libya. Obviously, huge changes of government, huge change of culture, but also some great investing opportunities for those who are prepared to jump in now. And as you move down the continent, sub-Saharan Africa is hitting growth rates of 6, 7, and in some countries even 8%. So where historically everybody would be clearly focused on South Africa, there are other opportunities within the continent of Africa. And maybe today we can just briefly touch upon some of those and how it will potentially affect you in your investments in the future. Well, the global economy has hit the wall in 2008, and it's still very, very clear that when you look across to the US, you look across to mainland Europe, even the UK, and even places like Australia and New Zealand, the central banks of the world are still flooding those economies with free money, cheap money. The growth rates in those countries are very, very low, and in some cases unemployment rates are as high as 24, 25% when you come to check youth unemployment. That's a key figure because that basically means you could lose a generation, and that may take 10 years to come back. So if you look at the Eurozone, growth rates of 0 to 1% at best. In the UK, you may be looking around 2%, and in the US, 2.5%, with the US still having a historically high unemployment rate of 8%. And that's been like that nearly for 2 years now. So really, if you're an investor, you need to focus somewhere else. And obviously Africa, for some people, still is the undiscovered continent, and it could really present some great investing opportunities. You look at places like Tanzania, Botswana, even Mozambique especially, the oil and gas discoveries there. I've seen big multinationals pump billions in there, and that's one of the key elements of investing in Africa. If you really hit a success story and you get the multinationals coming in, you start to get great infrastructure. And from great infrastructure you can really build. Because let's be honest, most of Africa is still living below the poverty line. There's a huge untapped potential middle class that could emerge in the next 15 years, but you need the right ingredients to make that emerge. Obviously you need demand, you need a much higher standard of living in a lot of African countries, and you also need infrastructure, and that still remains some problems, is getting that infrastructure in. But those that have hit the commodity trail, like I mentioned in Mozambique, are starting to see a better infrastructure, and they're starting to see an emerging middle class come. So I think in the next 5 years, if you're looking to invest in Africa, really you should be looking at the commodity plays. We've already seen how Mozambique has developed. Obviously Nigeria is now well established in the oil industry. You have to try and look for that next story. Tanzania is coming onto the radar, and even some talking about Somalia. Well, that's very, very early days. Financial services, already seeing companies move back into Zimbabwe with a 5 to 10 year view. And don't forget, this is Africa. Things will not happen overnight, but if you position yourself well, you make your early contacts, and you understand how the local market works and how it wants to position itself to grow in the next 5, 10, 15 years, then again, the upside is horrendously good. Rwanda, another one that's doing very, very well at the moment. People that entered Rwanda 5 years ago, the country has changed dramatically in the last 10 years, are starting to reap the rewards. The coffee production again is moving higher. Again, it's commodity driven. It's not always about hard metals, it's about foodstuffs as well. And if you can get parts of Africa becoming once again the garden of the world and sowing crops and reaping those crops, again, it's going to be a great story. A growing global population needs food. So don't forget, not always about oil, gas and gold. Things like coffee, tea are still great markets to be in.
In the next part of our show, our economist Dr. Yusuf Ismail will be talking to Mr. Raj Desai, who is the Chief Executive of Bank One. Bank One is one of the fastest growing young banks in Mauritius. Bank One is also looking forward to spread its branches in the African continent.
Our guest today is none other than Raj Desai, who is the CEO of Bank One. Raj, welcome.
Good afternoon.
Bank One is, as we know, one of the fastest growing local bank in Mauritius, and now having an appetite into Africa. Why the move in Africa?
This bank was an ailing bank, and we took over this bank in 2008, which is a joint venture between CL Group of Mauritius, one of the biggest business conglomerates in Mauritius, and I&M Bank. I&M Bank is the fourth largest bank in Kenya, having 19 branches. They have an asset size of nearly $1 billion and a profit after tax of around $60 million. They have among their shareholders DFIs like Proparco and DG. I&M Bank, to its credit, recently acquired two banks, one in Tanzania, which is now rebranded as I&M Tanzania, a previous CCFU bank, which is on another asset size of $120 million. And very recently, a bank called BCA Banque Commerciale Rwandaise, with 18 branches and $152 million of assets. So that gives, a good footprint of I&M Bank presence in Africa. So when we started this bank in 2008, Bank One in Mauritius, we started it as a 50-50 joint venture between Ciel and I&M Bank. Of course, there was a huge potential at that time in the domestic segment because there was a large amount of rupee deposits lying on this bank, which we were able to profitably deploy and turn around the bank in a very quick and efficient manner. But Mauritius being Mauritius, with a limited geography and a limited population size, the room for growth is very limited. Especially we've got around 21 banks in a small country like ours. So it is true that many of the banks which are here do not necessarily indulge into domestic banking. But for those who are there, like MCB, SBM, ourselves, and the other banks, the competition is very, very tough. A very cutthroat, price wars, fees wars, price wars, pressures from the local population, pressure from the central bank, and the scope of growth is very limited. So you're bound to look, I would say, westward. For us, east is too far away. The only way we could look is west. Look west and look at neighboring countries like Madagascar in the Indian Ocean, Seychelles, probably Réunion Island, Mayotte, Maldives, Comoros, and further down, look at Africa. The future of Mauritius lies into Africa as an hinterland. There's no two ways about it. And it is good that our deciders, our political leaders, have realized that except with the help of the hinterland in Africa, the potential for Mauritius growth would be very, very constrained. The intention was to make this bank become an international bank, in the sense that, yes, we would look at a small portion of our domestic asset, but mostly focusing into Africa. Now that poses a second problem, is that I&M Bank itself is already in Africa, and as I explained earlier, they will be expanding into their part of Africa, which is Kenya, Rwanda, Uganda, Democratic Republic of Congo, probably Ethiopia or Sudan, all this part of Eastern Africa. While Bank One will be looking more towards Southern Africa, which means Madagascar, South Africa, Botswana, Zambia, Mozambique, and these are key countries where Bank One is looking at. We need not say the potential for Africa is immense. We know that there is a large amount of unbanked population. We know that today you have loan sharks which are skinning off people at huge, humongous interest rates, and there is a need for good commercial banking coming into Africa. So for us, the strategy has been cleared from 2008. We need to be moving quickly into Africa before the others get ahead of us.
So we can see, Raj, that you already got a foothold on the Lion continent. And we've also seen locally this sector, the financial sector, and more specifically the banking sector, has been growing above 5% a year. And now government sees that as a pillar of the economy, not just for the domestic market, but also to expand into Africa. In your views, how can we see, and how can you see government, what are the things that government has to do to make sure that we become a financial hub, as mentioned in so many speeches by government, that they want to make Mauritius a financial hub? In your views, what are the ingredients that we need to make it happen?
No, first of all, I'd like to mention that going into Africa is a business decision. And as business people, I would say that government can only be there, or the political leaders can only be there as a facilitator. We should not expect more than this. And it's a commercial decision that economic players have to take into account. But as a facilitator, the government could create an environment which becomes conducive for people to invest. First of all, we have already nearly 40 or more double taxation agreements with Africa, which is a plus in itself. Secondly, there may be some meeting that the government could facilitate exchanges between chambers of commerce, which could be arranged. And I would not speak of any subsidy because I don't believe in subsidy. I believe businesses have to stand on their own. But facilitating meetings, facilitating market meetings, and creating more dynamics, DTAs, is what the government should be doing.
With the financial crisis in Europe and the difficulty now with all the issues to do with India, we've also seen there's an influx now of investment into Africa, whether it's infrastructure, whether it's building of roads, dams, even in the financial sector. How can investors, potential investors, see Mauritius as a platform to build, for example, private equity, to build a special vehicle into Africa? In your views, can you see somewhere, somehow, there should be that platform where we could be the Luxembourg of Europe, for example?
Yeah, absolutely. I think there's a huge infrastructure deficit in Africa. I think we don't need to fly high to see that. Dams, as you said, roads, harbors, ports. A huge amount of infrastructure deficit which has to be made good in a very short span of time, which needs huge amount of capital, and capital has to be raised from different various countries. I think the advantage that Mauritius poses is that Mauritius is considered within Africa as the best financial center with the most consistent legislation, which gives a lot of credibility to investors as a financial sector. We believe that Mauritius could be what Singapore has been to China initially, or what Luxembourg has been to Europe, or what the British Isles have been to UK and elsewhere. Mauritius, with its solid law and good governance, could become a financial center where enterprises or government could raise money through Mauritius because of its credibility and its rating in the world. That's, for me, is a big opportunity both for Mauritius and for African countries in the region.
And we always hear the usual cliche, Africa comes with risks. And if you were to look at the risk that the bank should be avoiding when they want to go into Africa, what are these risks you can elaborate on?
Yeah, I think, there's no business without risk, because if there was no risk, there would have been any business. We'd be all sitting homes with plenty of cash and going around with leisurely. I think if we want to do business, we have to understand the risk and know how to manage the risk. First of all, people talk about a lot of corruption into Africa, malpractices, and I think these are things that will change over time. We believe that as good governances, practices get into the culture of African business, these political and corruption offshoot will die down, as it happened in many countries. Likely to persist for some time, but I believe we need to be driving at good practices wherever we go. And over time, let's say if we have 5-10 years, this will die down to much less extent than what we are today. That's first thing. The corruption is what really scares people as soon as you walk into Africa. The second thing that scares people is the political risk. The risk of revolution, the risk of change in government, the risk of coup d'etat. And as businesses, we are very worried of misappropriation, for example, and repossession by the government. So these are things that make people scared. But I think the African leaders now have come to understand that if they play that kind of game, then people will shun away from the markets, and they are the people to lose. When you talk about economic growth and when you talk about future growth, it's only foreign investment that really is one way of a sustainable development. When we talk about sustainable development, there's no African country or even Mauritius on its own, out of its own generation of surplus, can sustain the amount of deficit, capital deficit or capital expenditure deficit that is rampant in this country. You will need FDI. You will definitely need FDI to get to sustainable growth. And for you to get FDI, you have to be stable. You have to give confidence to the investors. If they play their nasty games of political coup d'etat or upheavals, people will shun away and go to rivaling countries. There's not one choice in Africa. There's probably 44 choices. And if one country is trying to play gimmicky, I'm sure his neighbor will be benefiting. So as people get more mature, as leaders get more mature, this game plan would change, in my view. But it's a question of patience. I mean, those who are going to be there first, are going to be there first, are going to reap the benefits first. So if you're going to come, let's take a country like, for example, Zimbabwe. Zimbabwe today is a country where you would want to put your foot down. There are certain enterprises who have taken the risk and ventured there, waiting for things to clear up and then benefit. So it depends on the risk appetite of different enterprises. We should not be scared by these risks. We need to understand those risks and manage those risks and help to make this risk become more mitigated as we go down the road. I don't think people are worried about the risk too much now as things get clearer down the road.
And with risk as bankers, you know, comes opportunities. If you look at the domestically, in Mauritius we've seen we have a very mature banking market. Competition somehow is rife. We are now having above 20 banks. Only recently, last couple of months, we had another bank that has joined the landscape. What has been the success despite a young bank? What has been the success and what are the plans for Bank One going forward in the local market?
Yeah, I think the first success factor has been understanding the market. You know, when we took over the bank, we brought in a team which was very well tuned with the different market segments. So we brought in a team who knew the retail market, who knew the corporate market, and this is where it helped to deploy the excess rupee fund that we had. Now we also brought in a team which knew a little bit about international banking, and we started international banking in 2008, which is focusing on raising deposits from outside Mauritius and lending to outside Mauritius. Within 5 years, I can tell you that international banking now contributes around 45% of our profit and 45% of our balance sheet. And we believe that in years to come, it should be going more towards 65–70% rather than 40–45%. So it's the knowledge of the market, first of all, which has helped. Secondly, it's about looking at opportunities, effectively smelling those opportunities and going quickly. As a small bank, I think what has helped is the speed of response or the speed to take decision. Between me and the clerk, which is at the counter, there's only 3 layers. So by the time there's a decision need to be made, it comes to me within an hour, and the decision is made. And I have a board which gives the management enough freedom to decide quickly. We have enough freedom of action so that things are decided quickly. I think the speed of response has been, as a small, agile bank, has been what has also helped in getting this bank back on track and progressing as you said.
Thank you, Raj. In short, we can see how having the right strategy, having customer centricity, and also having the speed can make a success to anyone. And we thank you.
Thank you very much.
Thank you for watching Biz Africa. If you have any comments or suggestions concerning the show, please do not hesitate to contact us on televisionmaurice.com. See you next week. Till then, bye-bye.